In year 2017, the United States Bankruptcy Court for the District of Arizona adopted the Mortgage Modification Mediation Program. We call it the MMM. This was a program that they first tried in the state of Florida, and it was very successful. Then they had the program in the state of Nevada, very successful, and finally it made its way to Arizona, where it's even been more successful. What happened in year 2010, roughly, was we had some legislation that we thought would pass the Congress that would allow everyone to go into the bankruptcy court and force a reduction on their mortgage. We even had bankruptcy judges down in the courthouse telling people, come back in a few weeks, we'll redo your entire mortgage. The whole idea of Chapter 13 is that we're going to eliminate those debts we need to get rid of, credit cards, medical bills, student loans, but we're going to force payment reductions on those things we need to keep and pay off. So we can lower car payments, we can pay off IRS taxes at zero interest, zero penalty, student loans deferred out of the way for an entire 5-year payment plan, no payment of any kind. So it was only logical that they would extend this reorganization to mortgages. Why can't we come in and take 23 years of a remaining mortgage and make it 30 years or even 40 years as we're doing now? Why can't we lower that house payment so it's more affordable? Well, they couldn't get that legislation through the Congress, but what they did do was the government did come in with some programs to encourage loan modifications. Well, over the course of years, it became obvious that the lenders were more interested in the financial outcome, making money, than keeping the homeowner in their home and allowing them to have the more affordable payment. So along came the MMM. The MMM is a program that forces the lender to participate in a court-supervised modification program. It forces the lender to meet deadlines, to offer suggested options to work out a home mortgage problem. Now again, bankruptcy judges don't have the power to force a modification of a mortgage, but they do have the power to sanction those mortgage lenders and their representatives who do not act in good faith. We've seen about an 80% success rate with the mortgage mediation modification program. People are emerging with new mortgages where they couldn't get that done on their own without the benefit of bankruptcy. One other benefit of Chapter 13 is when a mortgage lender takes a look at the homeowner's budget, they're considering whether or not they should offer a reduced mortgage. And under the program, a reduced mortgage basically says that the mortgage payment will not require more than 31% of the homeowner's income. So when a lender is looking at that, can this person afford the reduced payment if we grant this loan modification? They want to know, what other debts do you have? Do you have credit card obligations? How much are your car payments? How much room is there in your budget to afford this new payment? So one of the beauties of Chapter 13 is we're able to eliminate, in most cases, credit cards, medical bills. Those are out of the way completely. Unsecured debts, gone. Then other secured debts, such as vehicles, we can lower the payments on those by lowering the interest rates, lowering the price of the car down to the value of the vehicle, and taking that loan out to 5 years. So suddenly we are freeing up the budget. Student loans are out of the way. While you're in Chapter 13, that doesn't come into the equation. They are on the sidelines. We may even see legislation that's pending become law so that those are gone by the end of the payment plan. But nevertheless, even under present law, they are out of the way. So suddenly the budget is freed up because this is a case that occurs under a Chapter 13 bankruptcy. Debts are going to be completely eliminated, so they're out of the budget. We don't have to show those obligations when we're looking at, can the homeowner afford this home? And the guidelines of the 31% allows us to suggest the reduction of the house payment so that it's within no more than 31% of the homeowner's income. So it's a great formula. It's supervised under the court. We've been bringing these since February 2017 when the program came into being. It is a process that we go through. It takes about 4 to 7 months to get to completion. Generally, there'll be a trial plan payment that's approved by the bankruptcy court once it's accomplished between the lender and the homeowner, and then that becomes a final plan payment, a final mortgage payment by the end of the MMM program. We offer free consultations at Wesbrooks Law Firm regarding the Mortgage Mediation Modification Program, and we encourage you to schedule an appointment either in the office or by phone. Call 602-262-4357 to schedule your appointment today.